Hey everybody, Courtney Smith here with our June 7th, 2021 edition of Wall Street Winners, our 26th year. Kind of scary. Do I even look that old? All right, and this disclaimer is even older than that. Now, we have kind of a mixed picture this week. So let's take a look here at the S&P. You can see we're just under all-time highs. We're at the second highest close in history. Purple Predictor, really? Not that strong. So once again, I've been talking about this for a month or so. This bull market is going to be sluggish. It's going to have constant dips. So, for example, I think we have a very good chance to go make new all-time highs this coming week and then have another drop like we had in May and see that over and over and over again. Go up, get everybody long, and then have the market drop again and make everybody jump out because they're afraid of a big bear market. Remember, the market will do what it has to do to screw you. And that's how it's going to do it right now. You watch. Now, the Dow Jones, let's break this down. In the upper right-hand box, the little green arrow, a little green line is above the little red line. That means buying pressure is stronger than selling pressure. But the black line, which is going down slightly, says that we're in a neutral market. I think that's pretty clear. Now, down at the bottom, I've drawn a blue line across the tops of that little green line. Now, the little green line is RSI, also known as Relative Strength Index. And what it's showing is that the momentum of this market is running out of gas. It's running out of gas. So we finished the seasonally bullish period. Now we're going to go into a seasonally neutral period. Well, we'll get to seasonality here in a second. NASDAQ has a nice pop on Friday, but Purple Predictor remains tepid. So this is not really going anywhere either. Seasonality, have to put it at neutral now. We got through our seasonally bullish period, and we got into the plus territory, the extra month of May, and now we should expect the market to just chop sideways until September or October. Utilities are in a bullish period, but they're not acting bullish. Now, when something is not acting the way it's supposed to act, that's kind of bearish for the Utes. Now, what we need to look at is the red and the purple lines. Now, the red line is post-election year. This is the presidential sector, a presidential cycle. And you can see it's negative. It's negative for green, which is all post-election years, and it's negative for the purple. So we should see the market drop over the next 2 weeks, and we can probably drop into the middle of July. This could be a 5% drop. Now, first, we're going to have to go up, as I say, break to new all-time highs, get everybody excited, and then smack them in the face. So Monday, Tuesday, look for strength, then start looking for the market to drop lower. Momentum is not strong. Seasonality is negative. Asset allocation, neutral. It's just going sideways. There's no new money coming into this market. And people want to take less risk. If they want to take less risk, then they're not going to want to buy stocks. However, global shares are doing much better, and this is dominated by European shares. This is the EFA index. But, you know, they're coming out of COVID. England's opening up. They're opening up slowly, but we're still seeing a rally here. And I think the place to be now is in global shares more than American shares. Yield curve drifting, but not really doing much of anything. Bonds got a nice pop on Friday, but the Purple Predictor remains bearish, so I can't get excited on the long side or the short side. The fundamentals are still bearish. We're still seeing most of our indicators, 3 out of 3, 2 out of 3, let's call it 2 3/4 out of 3, are still saying we should see higher interest rates. Dollar popped up a little bit. I think the dollar is going to remain strong here near term, and then we can, over the long run, still be in a big bear market, but get a continuation of the pop. Now that means that gold could come under pressure a little bit here as well. We had some big action on Thursday and Friday. Generally speaking, I think this is just a regular retracement. And I think that big reversal bar on Friday is a great buy signal for gold. And I may get into some gold now. Gold key indicators remain tepid. That's the word of the day, tepid. One down, one up, one sideways. Can't get that excited if our indicators are so mixed. Crude oil remains strong. Now, we did I'll bring it back up again in a second, but we did a special presentation. You can go to my YouTube account, go to my YouTube channel, which is Courtney Smith Trading, and watch the whole presentation. It's about 35, 40 minutes. Explains everything there is to know about the oil market right now. The point is this: be bullish. Be bullish. I go into the deep fundamentals. It is a fantastic, insightful, you're going to see unique analysis you've never seen before. I'm actually in the United Arab Emirates, and one of the locals who I gave it to here, they said this is amazing analysis. It's not like anything they see. And of course, the UAE is a big, big oil producer. Bitcoin remains on the bear side. This is clearly a bear market. I mean, I don't think there's any doubt about that. And if we can break down to new lows, I'd consider going short here. I'm going to look about putting some orders in my futures account to get short Bitcoin here, looking for it to keep on moving lower. We're making a little bit of a triangle formation, a pennant formation, and that should be broken to the downside. So keep an eye out for this.